Welcome back. So cues across Asia have been a little muted, but given the kind of sell down we're seeing in some of the regional markets, 12-point cut on the SGX Nifty, maybe not that bad. Let's see if we can indeed track that. Right now, it is time to talk stocks. Our entire team is standing by with the CNBC TV 18 list of top 10 stocks for the morning. And really, the stock of the day for the wrong reasons has to be perhaps Tata Motors, a shocker of a loss coming in. Sonia's not here with us right now, but she did send us the fine print on the numbers. So let's just hear this report.
It was a shocker for Tata Motors this time around. Hugely negative numbers, a big consolidated loss of 26,900 crores because of a one-time loss of 27,000 crores that they had to incur on account of impairment of JLR's assets. But even if you strip that off, the Jaguar Land Rover core operational performance has weakened substantially. It's the third consecutive quarter of losses for JLR. In fact, JLR has reported a net loss of £3.1 billion this time around, much higher than what they saw last quarter. But the biggest disappointment really lies on the margin front. 7.3% margins is what Jaguar Land Rover reported, much below street expectations of around 11% and a 360 basis points fall on a year-on-year basis. The management blamed it on weakness in China as well as the destocking impact. Even the standalone numbers were nothing to talk about. In fact, standalone revenues grew just 1.5% year-on-year to 16,200 odd crores, and it recorded a 600 crore profit. However, the standalone business is very small. The big disappointment really comes from Jaguar Land Rover. On that context, the management did mention that the demand situation continues to be quite muted and things could continue to be challenging despite the cost control efforts that they have undertaken.
Okay, so shocker of a quarter from Tata Motors. Let's now hear out what PB Balaji Group CFO at the company had to say on the JLR performance.
Jaguar Land Rover, the performance was impacted by corrective actions that we have taken in China, the weak market conditions there, and the production shutdown there. The revenue at 6.2 billion was down 1.4%, and PAT at minus 3.1 billion pounds basically got impacted by the corrective actions that we did on taking an impairment on our assets there. Taken a one-time exceptional charge for asset impairment. This reduces the growth and depreciation and amortization rates by almost 300 million per annum going forward. So it's a right step that we have taken in terms of reducing our costs, improving our break-evens, and as well as ensuring our competitiveness.
Okay, and now Surabhi, what are the brokerages saying?
Well, mixed bag, but there are lots of downgrades that have come through as one would expect. Lata, I'll start with CLSA. They've cut the target price to 150. They've retained their sell, which means the stock basically gets back to its 52-week low if you go by that call. Reasons, they're talking about the huge margin decline that we have seen in JLR, saying demand has weakened both in China and in the Indian market as well. They've downgraded EPS estimates between 2 and 66%. I mean, that's the extent of the cuts. Moving on to DB, hold rating over here. Target is 175, so higher up versus CLSA. They're saying the operating environment is likely to remain challenging in the near term. Again, the FY19 EPS has been cut by 38%. Next year, FY20 has been cut by 10%. I move to Axis Capital now. They're slightly more sanguine. I mean, they've retained a hold call. Their target is 187. And they're saying that the EBITDA margin was, of course, the big shocker. It was 200 basis points below their own estimates. But they also add that the P&L seems to be troughing out. The question is, how do you buy this dip? They are saying they will get constructive on JLR as two things happen, that China volume starts stabilizing and much of this Brexit problem and the concerns are behind us. So those are some of the street views.
Okay, let's move on now. The other disappointing number clearly was Britannia, especially considering the kind of valuation that it trades at, Mangla.
Absolutely, Anuj. You know, lagged crunch, if you must, as far as the numbers are concerned. So 11% revenue growth, 10.7%. This compares with our poll of 12% growth on the company's top line. 2,842 crores is what the company posted. There was margin expansion to the tune of 40 basis points. The street was working with 60 basis points. So 452 crores on the EBITDA. Net profit was pretty much in line with our expectations of 307 crores, came in at 300 crores. That was primarily because of other income. Other income came in at 60 crores. This compares with around 35 crores. Volume growth, that did not meet street expectations. The street was working with a double-digit volume growth. The company posted just about 7%, but that shouldn't be a bigger concern because, you know, the company made up for price and mix what it lacked for volume. So that's okay. The reported numbers were weak. Management commentary was weak. Management has said they witnessed slowdown in marketplace in recent months. And this was astray from all the other FMCG companies. And mind you, the stock trades at near record highs, 51 times FY20 earnings. So could be a bit of a dip today.
Those are not quite the cookie crumbling. It's just that the cookie doesn't deserve such an expensive...
Lax crunch is what I said.
Well, I agree. It's not a little more than lax crunch. It's just that it's expensively priced. It didn't live up to that price. Okay, now let's come to other stocks. SAIL, Nigel?
Well, Mangalam has been telling us that FMCG companies, they have been pushing sales at the cost of margins. The Ferris guys, they're doing it differently. You know, they're not pushing volumes, but they're maintaining their margins. At least that was the trend for the past quarter on. So for SAIL, actually, the top line was a big miss. It was a miss by close to around 8 to around 9% approximately in comparison with our poll. It was lower than the lowest estimate on the street. Remember, sales volumes, we were working with a number of around 3.7 million tons approximately. SAIL came in with a number of around 3.25 million tons. So that was sharply lower than the lowest estimate as well. But the profit number was a little better, 2,500 crores plus, margins as well at around 16%. So for the past quarter, they have managed to maintain their profitability. Though the couple of concerns are, they're sitting on a huge inventory. Inventory is more than 2,000 crores, similar as the case with other Ferris players as well. All eyes now on China, and post the new year, whether or not demand comes back and pricing come back. Finance cost as well as higher, so those are the concerns. But the stock could open up in the green because the operating profit is better. And in the last 1 year, the stock has halved. So maybe, in fact, on the back of that, we could see the stock open up higher.
Oh, yes. My fundamental complaint with SAIL will always be, what is the government doing in steel? I mean, no country has it. This is the limit.
I think the legacy of the 1950s continuing.
Can't you shed legacy?
And when you have a
point?
fiscal deficit issue. Anyway, though, that's a long academic discussion. We could go on and on.
Try selling it in this environment. You'll have knives out with so many.
No. And when you have the IBC chock-a-block with steel plants anyway.
There's so many intellectuals, and everyone will be after the government. It's tough. This thing. Air India, for example, I tell you, there's a lot of blame.
I think the Babus killed it.
But
how can you give a list of caveats like that?
The problem with Air India right now is you try selling Air India. Now the issue is there's always going to be a blame of crony capitalism on the government. If you try to do it, and that's the sad part.
The sad part is one was hoping that the UPA coalitions did not. Will the NDA coalitions do? Because at least they don't have the legacy. Who built the steel plants? It was the Congress legacy. So my only hope was that maybe another...
But Lata, I must say, it is a buyer's market, not a seller's market. When there's Air India, there's Jet. It's just the general environment.
It's now. Steel was in a very good spot. Anyway,
they could have
getting into away from top 10 way too much. Ekta, Aurobindo Pharma numbers were good. So let's discuss something nice.
Yes, absolutely. Aurobindo numbers really actually beat expectations. So the revenue growth was around 20% and this was led by their mother market, which is the US market, which was over 40% of their sales. US formulations were up around 27% on a year-on-year basis. Margins were maintained at around 20%. The street was estimating that, and the profit also grew on a year-on-year basis. However, there was a niggling worry from the finance costs, which in fact spiked on year-on-year as well as sequentially. The conference call is at 8:30 a.m. I think the street will want more clarity on issues such as their Unit 4 observations as well as Unit 11, which is currently under inspection.
Okay, fine. Thanks a lot for that, Ekta. Sonal, you have a bunch of other numbers.
Yes, I have a long list, and I'll start with MRPL, where the numbers were very, very weak. The inventory losses stood at $4.63 per barrel. They were higher than estimated, and all this led to reported GRMs coming in at negative $0.63 per barrel. So that is very weak performance by MRPL. Endurance Tech reported good set of numbers. The profits increased by 24% on a YOY basis at 96 odd crores. HCC, well, let's not talk about the P&L, but the finance costs, they have increased quarter on quarter. But the company says that they are looking at multiple avenues to mitigate risk, but the stock should see some red today. Apex Frozen, very good set of numbers. The revenue is up 229%. The profitability also is very good, was up around 364% on a YOY basis. Future Supply also similar numbers, good set of numbers coming in, profitability up around 57 odd %. For Phoenix Mills, the rental income, the retail rental income was up 16 odd %. The retail consumption also went up by 10% on a YOY basis. The operational performance was also good. EBITDA margins increased to 50.4%. Now Bharat Ventures, the net profits that came in lower by 54% because of a higher tax expense. So the tax expenses came at 107 crores versus 13 crore rupees. But overall, the performance was decent. And lastly, Minda Corp, where it was an operational miss, the EBITDA margins came in lower at 7%. Expect some red on that stock today. Back to you.
Okay, all right, Sonal, thank you for that. That's a lot of earnings that we have to pour over. But beyond earnings as well, there are a couple of very interesting stocks making it to the headlines today. One of them is Cafe Day Enterprises, also Mindtree. It seems Mr. VG Siddharth has finally made up his mind to sell stake in Mindtree. Also, Varun Beverages on Mangalam's radar.
You got to love it. You know, you talk about biscuits, you talk about coffee, you talk about Pepsi. But these two deals have been so long coming, Surabhi, that if someone told me that both of them will happen on the same day, I'd say, no, you're kidding. It's going to snow in Delhi. Well, both of that happened at the same time. So if you take a look at Coffee Day, VG Siddhartha and the company has finally made up its mind to sell its stake in Mindtree. 16.4% is what the company and its subsidiaries have. Amounts to about 2,500 crore rupees as of yesterday's close. This would help the company mitigate the debt of close to 4,400 crores that they have. So the debt halves, and that's a positive. For Varun Beverages, this has been told that, you know, they will acquire more states in the country, and now they've got Maharashtra, Madhya Pradesh and Karnataka. A bottler for Pepsi, their revenues increase as their regions increase. The company says that these are under-penetrated states and they will go ahead and improve their business. So both stocks should be in the green, but let's see how they pan out given the fact that this news has been so long coming.
Oh yeah, that point is taken, Mangalam. Thanks a lot for giving us all those details. Yesterday we saw some seminal fall in the Reliance Anil Ambani group of stocks. Nimesh has some details on why.
So, Lata, you know, if you look at the block deal data, it very clearly suggests that one of the lenders, which is L&T Finance, they sold all the group stocks of ADAG via block deal yesterday. So, if I just quickly run through, they sold Arcom 2 crore shares, Reliance Capital close to 80 lakh shares, Reliance Infra close to 50 lakh shares, and Reliance Power close to 6 crore shares. So, this relentless pressure on the ADAG group stocks continues. And yesterday, as I said, the lenders have sold, you know, at least L&T Finance has sold close to, you know, across all the group stocks. And what we understand is this selling was largely to recover 220 crores of exposure that L&T Finance had to the AGD group stocks, and this is including the interest as well. So no official feedback from L&T Finance, but what we understand is they've recovered the entire amount, including the interest, so no hit for L&T Finance, but this relentless pressure on ADG group stocks is likely to continue.
Okay, all right, so we'll watch out for the ADAG pack as well as how L&T Finance is going to react to that development. Anuj, finally coming to you. What are you watching out for today?
So one green, one red. I think United Spirits, it's a stock showing signs of bottoming out on a Friday. I've seen some strong delivery buying, so let's see. I think Cadila is interesting because yesterday I was seeing, you know, what it looked like a really good set of numbers and pharma stocks were doing well, but Cadila just refused to sort of build on to that rally. It's in a bear market of its own, and I think there's some issue with Cadila perhaps.
You know,
that's why the stock is seeing this kind of decline.
I was actually looking at a lot of the notes, Anuj, that came out because the numbers seem slightly better than estimated. The US business was supposed to taper off because it's very, very high base last year. Nonetheless, it hasn't tapered off as badly. In fact, we've got some interesting calls. There is an upgrade from Macquarie. CLSA has a buy at 400. Nomura has a buy at 426. Let's see if that really supports the stock at all today. My
only issue is the market is supreme, and I think the market's sensing something here. You know, I frankly I don't care what what's the view.
The reaction has been negative to good numbers.
I go by what market tells me on when stocks fall on good numbers. Like it was the case with Z. I'm not saying that there's something brewing here, but the market is sensing something here.
Okay, all right, on that note, let's recap our top 10 list for the morning. Stocks with some positive news flow today are L&T Finance, Varun Beverages, Coffee Day, SAIL, Aurobindo Pharma, Endurance Tech, Apex Frozen, Future Supply, Phoenix Mills, Nav Bharat Ventures, and United Spirits. Stocks with negative news flow surrounding them are Tata Motors, Britannia, MRPL, HCC, Minda Corp, Cadila, and the entire ADAG group, including Reliance Communications, Infra, Capital, and Power. So we have a pretty mixed, even Steven list between the red and the green today.